let's get right to the top 3 things you need to know as the clock hits 9 a.m. Futures are in the green on this Wednesday morning after earnings reports from 2 major companies raised some investor hopes that things might be better than feared, even with a possible recession looming.
Just do it. Nike shares are rallying this morning after the company easily topped expectations and raised its outlook. We've got the breakdown on that report and why Wall Street is really optimistic about it.
And FedEx announced new cost-cutting plans for its operations after another quarter of weak demand for packages. We'll bring you the analysis you need to know. But we have to begin today with our top story, which Brad just mentioned, the monster quarter from Nike. Nike stock is surging this morning after the retail giant posted better than expected earnings and revenue in its most recent quarter, quieting investor concerns that the company would be hammered by weak economic growth. Couple things at play here, guys. First, liked on that earnings call last night that Nike execs hopped on this call and they said not only were sales strong during November when Black Friday kicked off, but also some of those strong demand trends continued into December online in stores. We have not heard that from many retailers. Nike is out here calling it out. Number 2, and I have a story on this on the Yahoo Finance homepage. Finally, inventory has started to come off its peak here at this company and looks like it's set to continue to improve. Nike calling that out on its earnings call last night. Analysts have really liked that.
Yeah, there were 3 things that I really took away from this, and you mentioned one of them, which is that inventory bounce back. I also really nodded to the basketball category here within this, and then additionally just the return buyers, and breaking down just 2 of those, if I may. One of them with regard to the basketball segment, they saw double-digit growth, and that was really one of the catalysts for this most recent quarter as well. They also talked about the repeat buyers that they saw over the course of the quarter on the earnings call, and really what that contributes to the direct segment. The direct segment grew 23%. Digital was up 31% as well year over year on double-digit growth in traffic and repeat member buying there.
Yeah, what's interesting, too, is that where Nike was selling its merchandise, right? The company has been, for the past few years, really trying to pivot more to that direct selling channel that you were talking about with its quote-unquote members. I think that just means people who have logins on the Nike.com site. I'm one of them, full disclosure, but I guess that's what they mean. It's not like you pay to be a member. You just sign up. Anyway, the point is they have been pivoting to that over the past few years. But this past quarter, they sold quite a lot of merchandise through the other channels that they've been sort of snubbing over the past few years or migrating away from, those wholesale channels. So that's been an interesting phenomenon. I don't know if that's something that's going to last or it just was kind of a way to clear out the inventory, but it is an interesting phenomenon, that sort of shift.
Yeah, they did talk about that. They highlighted, or they called out off-price channels. So on that earnings call last night, so of course, anytime you hear off-price, you're thinking about Burlington, you're thinking about TJ Maxx, you're thinking about Marshalls. I would keep an eye on those stocks this morning as well. Also, you want to keep an eye on a company like an Under Armour, Adidas, those stocks catching bids in the pre-market off of this Nike quarter. And perhaps maybe the retail apparel industry is past the worst in terms of inventory growth. Nike's inventory still up 43% year over year. They have a couple more quarters to get things right, but again, it is moving in the right direction.
Yeah, they said regarding inventory, they believe the peak is behind us as actions we're taking in the marketplace are working. And then to your point on wholesale revenue, that grew 37%. They cited strong marketplace partner demand. But when have we ever seen an athletic or a footwear and apparel company literally have customers who set up bots to buy their merchandise, to buy some of the most coveted SKUs or items that are on their website? Nike has that. And so that's where you lean into some of those repeat buyers. Of course, you have a restocking fee, and they've been battling up against some of those bots. But it really goes to show some of the strength of the brand itself. And then additionally, where they're able to move towards or through some of the inventory headwinds that they had been on a more accelerated basis, perhaps than some of the other competitors in the field.
Right. And Julie, you mentioned members, and I think that's a number the street tried to probe Nike execs a little more on. They highlighted they have 160 members.
160,000?
160 million. 160 million. It is unclear what those members are. They're not paying a subscription fee, but
they're just people who buy stuff from them.
People buy stuff, so they recoined it members.
Them,
but you have to wonder, is that a missed opportunity? Do they have an opportunity to do something like Costco and a BJ's and create some type of subscription model? And that is a lot of people on the site. That's a ton of people.
I think the free nature of it has certainly attracted a lot of people, and they already know that they're going to make their money on making sure that people have kind of a shock and awe. They've done that through shock drops to make sure that some of those members feel like they're getting access to something else before the rest of the people who don't have memberships have. So the access in itself and how they've been able to tease out certain drops versus other kind of items that may make their way into some of the TJ Maxx's or the Nordstrom racks or whatever of the world. I think that's where they've kind of really drummed up the value of that membership too.
I think they used to have, and I don't know if this still exists, a subscription shoe service for kids. Because as a parent, you know that your kids' feet grow quickly, so you're spending all this money on a shoe that you know you're going to have to replace in 6 months or a year. So that to me makes sense. There used to be a program called Easy Kicks, which I think Nike had a relationship with. Anyway, that to me seems like it's an interesting area to plumb as well.
Also China too. Real red flag, week across the board. Not good.